Bitcoin Bulletin is live. Get ready for a rapid-fire rundown of the biggest crypto news you need to know. First up, the Bitcoin price chart is flashing a major head and shoulders pattern, signaling a potential run-up to $114,000 thanks to an unfilled fair value gap. But Analyst Xanrox warns this could be a trap, leading to a massive crash. Then, El Salvador just dropped another 21 BTC on Bitcoin Day, boosting their reserves to over 6,300 coins. Is President Nayib Bukele signaling something big? We've also got Animoca Brands and DDC Enterprise teaming up with a massive $100 million Bitcoin Treasury deal, exploring yield generation and risk management. And finally, El Salvador's Bitcoin strategy is a global case study. What can other nations and Fintech startups learn from their bold moves? Stick around, you don't want to miss this. Subscribe and hit that notification bell so you never miss an update. Bitcoin price on the brink. A $114K run or a crushing dump? Bitcoin's chart is screaming a warning. A head and shoulders pattern is forming, and an unfilled fair value gap at $114,000 could be the trigger for a massive rally. This gap, left from a previous crash, is ripe for filling and could attract significant buy-ins, pushing Bitcoin higher. Crypto analyst Xanrox points out that this fair value gap sits directly above the emerging head and shoulders pattern. The expectation is that price will surge to fill this gap, potentially hitting $114,000. However, Xanrox cautions that this level is also a hotbed of resistance. Many traders have placed their stop-loss orders just above $114,000, creating a liquidity pool that whales could exploit to drive the price back down after the gap is filled. Once the $114,000 mark is reached and the fair value gap is closed, Xanrox predicts a significant bearish turn. The completion of the head and shoulders pattern, coupled with the preceding liquidity grab, could lead to a substantial dump. This crash is expected to push Bitcoin's price below the August low and the $108,000 support level, potentially plummeting as low as $106,000 before finding a new bottom. Xanrox attributes this forecast partly to September's historical performance, noting it statistically one of the worst months for both Bitcoin and the stock market. What does this mean for you? Prepare for potential volatility. The $114,000 level could be a crucial turning point, offering a brief bullish surge before a significant downturn. Keep a close eye on these price levels and Analyst Xanrox's warnings. Don't go anywhere, because the next story reveals a nation doubling down on Bitcoin, and it's not what you might expect. El Salvador celebrates Bitcoin Day with another BTC haul. El Salvador has once again made headlines by purchasing an additional 21 BTC on its National Bitcoin Day, marking the 4th anniversary of adopting Bitcoin as legal tender. This latest acquisition brings the nation's total Bitcoin holdings to an impressive 6,313.18 BTC, valued at approximately $702 million. President Nayib Bukele, who announced the purchase via social media, stated the move symbolizes Bitcoin's finite 21 million coin supply and reinforces El Salvador's ongoing strategy to build its reserves. Data from the El Salvador Bitcoin office reveals consistent accumulation, with the country adding around 28 BTC in the past week and over 50 BTC in the last month. On-chain data suggests a daily accumulation of roughly 1 BTC since March 2024. This continued accumulation occurs despite El Salvador's $1.4 billion IMF loan agreement, which reportedly required public entities to halt voluntary Bitcoin accumulation. While the IMF acknowledged El Salvador agreed to freeze acquisitions, recent reports suggest the fund's spokesperson claimed the country was not purchasing Bitcoin weekly, but rather reallocating funds from internal wallets, with total holdings remaining unchanged. In August, El Salvador redistributed its BTC across multiple addresses, with a cap of 500 BTC per address, citing enhanced security against potential quantum computing threats that could exploit public keys. Critics like Nicholas Carey of Blockchain.com have voiced concerns about El Salvador's top-down approach, arguing it deviates from the crypto ethos of grassroots adoption. However, The nation's persistent buying strategy, even amidst IMF scrutiny and security concerns, highlights a strong commitment to its Bitcoin reserves. The IMF has previously estimated El Salvador's Bitcoin purchases reached $300 million, generating over $400 million in unrealized gains. But El Salvador isn't the only entity making big moves with Bitcoin reserves. Next, we uncover a massive corporate treasury strategy that could redefine yield generation. Animoca Brands fuels crypto treasury innovation with $100 million Bitcoin deal. In a significant move for corporate treasury management, Animoca Brands has committed up to $100 million in Bitcoin to DDC Enterprise, signaling a new era for yield generation and sophisticated risk management in the crypto space. This strategic partnership aims to transform Bitcoin from a mere store of value into a dynamic, yield-generating asset. By leveraging professional tactics and disciplined risk management, DDC Enterprise will manage these substantial Bitcoin reserves, enhancing treasury operations for Animoca Brands and positioning DDC as a leader in Bitcoin treasury services. This collaboration reflects a growing institutional trend towards embracing Bitcoin as a core treasury asset. The broader landscape of Bitcoin treasury management is heavily influenced by evolving regulations. In Europe, the Markets in Crypto Assets Regulation, MiCAR, imposes strict compliance and risk management mandates, which, while providing legal clarity, can increase operational costs, especially for small and medium-sized enterprises, SMEs. For Asian fintech startups, price volatility remains a primary concern, potentially leading to liquidity crises if robust risk management frameworks are not in place. Navigating complex, often fragmented regulatory environments across Asia further complicates operations for these startups. To mitigate these challenges, companies are increasingly diversifying their crypto holdings beyond Bitcoin, incorporating stablecoins to buffer against volatility. Implementing stringent security protocols, such as multi-signature wallets and regular audits, is crucial. Some businesses are also exploring public market strategies for indirect crypto exposure. The key takeaway for businesses is the necessity of diversification, robust security, comprehensive compliance, and innovative yield generation techniques to master Bitcoin treasury management effectively. From corporate strategies to national policies, the Bitcoin ecosystem is buzzing. Next, we examine how El Salvador's Bitcoin journey is setting a global example. El Salvador's Bitcoin strategy, a global blueprint for crypto adoption. El Salvador's pioneering adoption of Bitcoin as a reserve asset continues to be a pivotal case study, offering crucial lessons for nations and fintech startups navigating the volatile world of cryptocurrency. President Nayib Bukele's recent acquisition of 21 BTC, bringing the country's total to 6,313.18 BTC, valued at around $701 million, underscores a deep commitment to integrating Bitcoin into its financial infrastructure. This strategic move not only aims to bolster economic resilience, but also serves as a potential catalyst for other countries to diversify their monetary reserves, signaling a possible shift in global finance perceptions of cryptocurrencies. However, the path of Bitcoin adoption is fraught with risks, particularly market volatility. For small to medium enterprises, SMEs, and fintech startups, understanding and mitigating these fluctuations is paramount. Strategies like asset diversification and disciplined investment are essential, though they introduce their own operational complexities. The evolving regulatory landscape, exemplified by the EU's MiCAR, presents significant compliance burdens and costs, highlighting the need for proactive engagement with regulators. El Salvador's experience emphasizes that a balanced regulatory approach is key to fostering innovation while ensuring stability. Best practices for crypto treasury management, including robust security, regulatory compliance, and transparent reporting, are vital. Incorporating stablecoins can help manage Bitcoin's inherent volatility, offering a more stable option for transactions. Key lessons for startups include adopting a long-term perspective for Bitcoin accumulation, leveraging crypto for financial inclusion, prioritizing user education, engaging proactively with regulators, and managing volatility through strategies like stablecoin integration. El Salvador's bold strategy, while promising innovation and inclusion, demands careful planning and responsible adoption to navigate its inherent risks and challenges. That's a wrap on today's top stories. But before you go, let's do a quick recap of everything you need to remember. And that's a wrap. We've seen Bitcoin's chart signal a potential $114,000 run, but warn of a looming crash. El Salvador just added more BTC to its national reserves on Bitcoin Day. Animoca Brands is making waves with a massive $100 million Bitcoin Treasury deal. And El Salvador's Bitcoin strategy is becoming a global case study. Don't miss out on the next big crypto moves. Like this video, subscribe to Bitcoin Bulletin, hit that notification bell, leave a comment with your thoughts, and follow us on all social platforms for real-time updates.